So very warm welcome to all the respected chartered accountants once again on the lovely rainy morning in Gandhinagar, Gujarat. So we are in the third session for the day, and it is on the technology and startup innovations in fintech, revolutionizing financial services. And in this session, we will have eminent panelists who will explore the dynamic landscape of financial technology and its impact on the financial industry. They'll be highlighting the emergence of fintech startups, trends in payment systems, digital banking, and how they affect traditional financial services. And for that, now I request the respected Central Council member, CA Piyush Chhajed sir, and the moderator for the session, CA Pankaj Mundra sir, founder and chairman of 360 TF. The panelists, CA Jinand Shah, Managing Director and Chief Executive Officer of Online PSB Loans, Ms. Deena Jacob, Co-founder and Chief Financial Officer, Open Financial Technologies Private Limited, CA Vineet Jain, Technology Expert and Secretary, UK Chapter of ICAI, to please come on the dais. A big round of applause for the Central Council member, the moderator, and the three panelists who will be enlightening us in this session ahead. And now it's my honor to please request the respected Central Council member, CA Piyush Chhajed sir, to please share his opening remarks for the session. Please, sir.
Thank you very much, Abhinav. The eminent panelist and moderator, Pankaj ji, Jinand ji, Deena ji, and Vineet ji. Esteemed members of the Institute of Chartered Accountants of India, ladies and gentlemen, a very good morning to all of you. The fintech is a topic for the today. Obviously, fintech ecosystem we will be discussing. The way it is changing is just like a weather which has changed today in month of November. Finding rains in Ahmedabad is very astonishing. And fintech is also going to bring such revolutionary changes, I believe. Fintech, as everybody knows, it's an acronym for financial technologies, the way the services would be delivered through a technology platform. And we all talk about Gen X, Z, millennials. And when we are talking of Gen Z, who is used to use these fintech platforms for buying the financial services. I think so. If I come from a place for 20 years, 23 years, even today, I would still wonder people writing a checks today. But when you talk of Gen Z, they don't know how the check has to be written. They are not aware of those facts. And that's how the life has been changing. Of course, panelists would be discussing. I don't know whether this fintech revolution will remain with Gen Z and millennials, or it will also change the way the others, I would say the seniors who are beyond or who are Gen X would also change and actually follow this. Of course, there are a lot of challenges in this. When we read newspapers, we just look into a digital frauds which are happening. Every day, morning, evening, there are a lot of frauds happening. I know how this fintech companies would be actually taking that up. A lot of important issues are there. Of course, when considering the cost benefit which is appearing, the market is becoming a borderless. We have a representatives from UAE and other countries, parts from a UK, who would be discussing. So market is quite open for the fintech companies. Now, it's not that you should be serving local, even a retail lending or a retail insurance product can be sold across the globe. That's how the fintech has changed, really. There could be various areas which our panelists would be with mobile banking, open banking, lending, regulatory apps, which helps in regulatory compliances. So we can talk of many more. But I believe in the space which they are, there is a lot of market share also still to be captured, because still there is the traditional way of selling these services continues. Especially in India, if I look at it, obviously the moderator and panelists will be throwing light on it. So let's listen to them. A very warm welcome to you, and thank you very much. Thank you.
Thank you so much, Piyush sir, for setting the right tone for the session. And now I request the moderator for the session, CA Pankaj Mundra sir, who is founder and chairman of 360 TF. TF stands for Trade and Finance, to take the session ahead and moderate. Please, sir.
Thank you, Piyush bhai, and it's wonderful to be here, part of GloPack. We have good diversity on the stage, where I myself, I'm in UAE for last 19 years as a chartered accountant. I started my career with banks and started my own in 2009. And now I'm the co-founder of 360 TF, which is the largest supply chain finance platform globally, with the intention of making receivables and payables zero in your balance sheet. We have, of course, our all eminent speakers along with me, two co-founders, Deena and Jinand Bhai, and of course, Vineet from UK. So we have between us India, UK, and UAE. Yeah, most diverse panel in front of us. Yeah. It has been interesting to know how the overall ecosystem of fintech have evolved globally as well as in India. So I will, yeah. So you could see this, as before we go to the panelists, that how the overall India has evolved on the fintech ecosystem. We are the third largest globally in terms of fintech ecosystem. More than 3,000 fintech have been registered. 46% of our real-time transactions are through fintech and fintech collaboration with the banks. And the penetration globally, India has 87% versus 60%, 64% global average. We are the fastest growing, and we see that the overall market size, which was more than $50 billion in 2021, going to be $150 billion by 2025. We are the largest or second largest in InsurTech in Asia Pacific, and which, we look the statistics show that it's going to go by 15x. InsurTech, I'm sure you understand, you have Policy Bajaj, one of the success story in India. The digital lending, the market size $270 billion in 2022, going to cross $350 billion by end of this year. And in terms of the overall global funding, while we all talk about the funding winter, but the India account in the second after US in terms of the deal volumes, where you see the investor traction. And we will see that how global investors also invested with the ventures of Deena and Jinand, which is online PSB and, open bank. So before I go to that, let us engage with the audience, with all of you who would like to answer this. You can raise your hand. Which city is hosting the significant number of fintech startups as called as fintech capital in India? Easy one, yeah? Bangalore. And we have Deena again from Bangalore, yeah? Company which is considered one of the world's largest fintech, offering services like WeChat Pay and Tencent Credit. Easy one again. Who is the largest among all four of them? Any guesses? Just Tencent Holdings. Just to give you perspective, they have a revenue of $80 billion last year. And of course, they are from China. Yeah. Segment with fintech like Policy Bajaj, specifying in insurance comparison, purchase primarily operates. InsurTech. Fantastic. So let me now go to our eminent panelists, starting with Deena. Deena, it will be great if you can give your quick intro and also share 3 key milestones which you and your team at Open have achieved.
Great. Good morning. It's a pleasure and privilege to be here addressing all of you and with eminent co-panelists. So I'm Deena Jacob, in fact, a chartered accountant also. This is the 25th year of starting to be and step into this profession. So it was great to be here looking at the new logo, what has happened in the profession. At the same time, I also have co-founded a company called Open Financial Technologies. We are providing an operating system for businesses, understanding the side of traditionally, the cash flow has been completely disjoined from all other parts, including accounting, document flow of invoicing. So bringing all of these together, commerce and cash flow together. And that's what we do for businesses, creating an operating system. Today, we work with around 19 banks in India on the banking side to bring that together on the platform. And at the same time, all over India, we have about 4 million SMEs that we service today, processing over 30 billion worth of USD worth of transactions on the platform. That's what we do. And we have been, we can say that India, traditionally, we haven't so far come to a complete open banking scenario. But at the same time, if you look at the way government is going towards and the kind of India stack and the initiatives we have seen in the last decade, we are in a great position, right from the start of the payment systems all the way to lending, and currently with a whole lot of push in terms of the India stack which has come through, we are making great progress towards a complete open banking kind of, where the entire banking data by consent, we can commit it to a central system which can be used from a 360-degree to for various purposes to serve the customers. So that's an exciting time which we have been seeing in the last 5 years compared to 2017 when we started. It has been 7 years. 2017 when we started, finding it extremely difficult both from regulation and from the infrastructure to pull this off, all the way to now where the entire environment is really accelerating and acting as a catalyst for collaboration. So those are the things which we have seen in the last 6 years. And in terms of milestone, again, last year we have been the 100th unicorn of India, one among the 22 fintech unicorns in India, and have been a very enriching journey, both in terms of inclusion we were able to bring for the SMEs, as well as in terms of the volume we have been able to see over the period, which shows the validation. It's not about valuation, but about the validation of how we are touching the lives of SMEs. So that's in a nutshell.
Thank you. Very, very inspiring, especially a woman chartered accountant. Let me come back to Jinand Bhai, who's well known probably to all of you. He's, by the way, youngest chartered accountant on the dais today among all of us. Yeah. And probably the most successful. So Jinand Bhai, the managing director and CEO of online PSB Loan based out of Ahmedabad. Jinand Bhai, you started your online PSB loan journey in 2018. Almost 5 years plus now. Share your journey and about online PSB, and maybe also share with us 3 milestones. Well, you have many milestones, but 3 with us. Yeah.
So, first of all, Majama Ahmedabad, very happy to see a lot of familiar faces over here. And being a chartered accountant who has been based out of Ahmedabad, I can see a lot of my friends also over here. So happy to see you all here. And all of you know my journey more than I know on the other side of the table. So definitely, yes, from cricket point of view, it has been fabulous journey. From the company point of view, this is something that has been for the MSMEs of the country. It is a company that has been today institutionalized. When we call institutionalized means what? It means that more than 60% of holding of this company is with the top institutions of the country. So while you are saying I was among the top among all of us, no, I think on valuation, Deena is number 1. So I'm after her today. But yes, on the stakeholders point of view, we have got the best stakeholders today in the company. So we have been successful in getting the right stakeholders, the strategic stakeholders. That is every bank. You can say the top banks of the country. Say it is SBI, HDFC, all of them, or TransUnion, Sibyl, or PNB, or Bank of Baroda, any bank you call, is there as a stakeholder in the company. Definitely, we have got the best auditors who are also present over here, Kimji, Kumarji, right? So very, very happy to have them as start auditors. The core focus of this company had been to automate the lending ecosystem. In 2015, I was sitting with all my friends, a lot of colleagues, and I told that I love to do things on maths, but I don't know how to go to a bank branch and sit with a banker and tell, okay, can you please look into this file? That was something I never, means in the 20s, you don't want to do that, or you have never learned that in your CA course, that sit with a banker and tell him, please look into this file. Can you please do the funding done? So the only way out was either I shift to Bombay and I know the head office and I sit with the larger files with the head office team, or I work for every member who is based out of smaller cities and create an infrastructure which connects a client directly to the head office. See, giving loans or giving money is business of banks. Now, for doing business, you don't have to plead the other guy that please look into my file. If the credentials are there, if the cash flows are there, it is the bank's business to lend. So what was stopping the banks to lend? So we met the banks, we saw all of them. We told them, if I give you an infrastructure where the data comes directly to you, right? And if your branch is not taking an action, you come to know that the branch is not taking an action. Can that infra be built? So everyone in 2015, 16, 17 was saying only a lead generation can be done. You cannot do end-to-end processing. But in 20s, we all have that, no, we want to do it. How it can't be done? How can you say it can't be done? So we all started with a small team of 6 members, automating that process, go to every bank, sit with them. A lot of chartered accountant friends helped me out over there. And then in 2017, we showcased it. The first milestone for our company was when 1 or 2 banks actually told that let us use it. In fact, ICICI was the first bank to do a deep dive of our system and bring out 200 loopholes that these things don't exist in your platform, which a banker required. In fact, that was a free service I got from the bank. And whenever I go to ICICI, I tell them that you need any inputs from me, I'm happy to give, because you give me those 200 points, which helped me to build an entire infrastructure of next level. And I incorporated those inputs. And in 2018 was the year when the first platform, which was launched by the Prime Minister of the country, which was called as 59-minute loans to MSME, was launched, which was an end-to-end processing, entire GST, income tax, bank statement, bureau, every data point which a bank branch has to check was available on a single platform, and every bank on the other side was available for an MSME to choose. So that was the second milestone, which you call that launch of such kind of infrastructure in the country. And it was launched as a gift for the MSME of the country. And today that platform has, we have processed. It's an end-to-end digital. None of my team members know how many loans got processed, which MSME got processed. We just know the numbers. We cannot look into the data that is getting processed. So the third milestone that you say is that this platform, where I had targeted initially as an individual, that I want to see that at least 5,000 MSMEs of the country get funded through me. But after the banks joined hands, invested in the company, today more than 5 lakh MSMEs have got funded using this infrastructure. More than 1,40,000 crore of loans have been processed, and 70,000 crores have been disbursed today. So this was a vision in 2015, 16, 17. And we have been able to, create a digital infrastructure, not agreeing to a view that it can't be done. And trust me, chartered accountants are the most resourceful persons today. We all feel that, okay, we take a position of CFO and we provide services. But trust me, you can be the best co-founder. If you can't start and be the founder, you can be the best co-founder, and you can provide the best inputs for any startup to grow. So whenever recently there was a conference in Baroda, and there were like 8,000 students, the first thing I told, a chartered accountant should strive to be a founder or a co-founder of any startup, which he believes this will grow. He has to have that self-belief to grow. And that is what we did it, the 3 milestones I told you. Many other things we did after that, but yes, these are the first 3 I want to share with all of you. Thank you.
Fantastic. No, this is really, really inspiring. And I'm sure today we inspire one of the chartered accountant in the room who become a co-founder, and probably. But, just to on the, as you said about the CA support or the chartered accountant support, I'm happy to share at 360 TR, we have 8 chartered accountant invested with us in the early seed round. So chartered accountant do support. And on the lighter side, you mentioned about the success and the valuation. You are again still younger among us, so you still have to catch up. And as you started after Deena, but so thank you so much. Getting to Vineet with us from UK. Vineet, you have worked with so Vineet is a Secretary General of UK chapter and worked with institutions like TCS and IBM. Vineet, it would be great to hear from you. You on the other side working with the large technology company and advising the clients and the bank. How have been your journey, and what do you see the learning we can take from the UK market from fintech ecosystem? Over to you.
Hi, good morning, everybody. First, really nice panel. I'm excited to see this panel, especially my co-speakers are entrepreneurs. This is really motivating for me. About my journey, I qualified in 2001. Then I worked for Big Four. Then I moved for technology company. Initially, it was very painful. I did not like technology. It was 2010. But after that, I started loving it in IBM. And after that, I don't think of moving out of technology. I recently moved to TCS within UK. And I'm part of merger acquisitions. Within that, I focus on technology, complex technology and finance, integration or divestitures. Now coming to the learning, what you can take from UK market, I would say. UK market is altogether different from India market. In some cases, India market is much, much, much advanced. If I talk about banking, the UPI systems are much advanced than UK. So I don't think there we should copy things from UK market. Uh, what you can copy are some elements like open banking, which is within world, I would say, I would take a pride that UK is number one. And even I was talking with Deena before that. She is from open market segment, and she was saying, yes, UK market is number one. The APIs, the way the banks have opened, you can flourish the fintech startups there. You can use the data of third party. Privacy is a big law, GDPR within UK. How to use the data, how to protect the data. That has to be regulated. The framework has to be there. Then only you can reduce fraud or issues. One of the reasons fintech gets burst is because of trust. We lose the trust. And that is very important. That thing is what you can copy from UK market. This is what I would say. Second thing I would say is some of the things, how they use data analytics in insurance tech, or you are using robo advisors, how they use algorithms. Those things are really fine-tuned there. The markets are really, in terms of stock market, the performance is much lower than what is there in NYSE or India. So they really ML models, when you, that is what they're doing great job, but some things you can take away from them. This is what I can share from UK market.
Thanks, Vineet. Thank you that. So, Deena, coming back to you, has integrated with ERP like Tally, Zoho, Oracle, NetSuite, Microsoft Dynamics. And, at the same time, connected with banks like ICICI, SBI, to name few among all your larger list. What are the key challenges learning from technology perspective in this integration with these ERPs and also with the bank? Because we ourselves have faced these challenges at 360 TF to getting bank on board. It is not easy. They want to be, last one once somebody have tested, so always to piggy bank on the first anchor bank to say it. And at the same time, the ERPs and exchanging APIs with, so over to you.
So remember the 2017 times, we started building open on first principles, wherein, as I mentioned, one on the cash flow side, which is happening in the banking systems, how that doesn't speak to all other systems, which becomes typically, from the CA perspective, we all had the issue of bank reconciliation, suspense accounts, be it from the audit side or from the other side that we have seen. And this is where we felt it should be solved by technology. And the problem is that these are just disjoint systems, which are integrally part of, very much a part of the entire transaction, which has to happen. So when we started building, the first thing was like, of course, in India, just getting a banking license to provide the entire banking is not the first part of call. So you have to collaborate with a bank. So remember going and speaking to banks, and the challenges varied, ranged right from what are you trying to do? We are providing, there are various providers who are providing different segments of this. We are also providing a whole lot of banking support. What new? Two, I have the willingness, but I don't have the infrastructure. I don't have the wherewithal because the system doesn't move as nimble and as agile as you really want to be. So these were some of the initial challenges, both from a regulation, because and regulation doesn't. And the other biggest challenge was like, which relationship will define with you, because there's a BC model, there could be a technology service provider, but how do we connect with you? Otherwise, on multiple fronts, you might have to connect with a bank. So come 2018-19, I mean, there were all of these challenges we had to go with, but the same way as Jinand was just mentioning, we also had banks who were willing to test out and work very closely with us. And that was a game changer. And they are the first ones who would have probably, I would say the whole acceleration and being a catalyst to the fintech evolving in India started both from the government and from the banks, I must say. And that is a very big differentiator as an economy, as a country we have seen. Also talks about why fintech and innovation is leading. I mean, India is leading that in the globe as well. So fast forward to around 2020, 21, when we hit the pandemic and beyond also, right from, and the government by the side has been putting the entire India's stack, if you look at it, the fintech stack, right from the identity, data privacy matters, the consent mechanism, all put together, this is evolved in a very different way. And regulation also, right from the sandbox to changes in regulation, new licenses which have been tried out, have been in the parallelly working towards getting this collaboration cemented very well. So I must say that since 2021, with the government initiatives and with the banks opening up, and this has become an ecosystem today. So while 2017-18 has been extremely challenging for us to even get the things up and running, even to build the basic product, it became much easier later because the system opened up. There were a whole lot of things which were working towards it. And currently, I must say that we are in one of the most exciting times in terms of probably if anybody is thinking of looking at fintech innovation, please, this is the time. And we have also faced things like, would Bharat they pay for it? Would Bharat, I mean, building products for Bharat, how will you even go and do the distribution, the penetration? Everything was a question mark. Is there money to be made out there? So I must say that there is no other time other than now, because there is the need of inclusion, need of penetration. Yet at the same time, we are just at the start, beginning of the entire infrastructure supporting it, and the collaborative mentality, which is seeing as an ecosystem to move forward. And this is a time to build, I must say.
Fantastic. Jinand bhai, you talked about the institutional shareholders, and I think few of your shareholders include SIDBI, TransUnion from America, from US, which is not easy to get onboarded. We have seen other fintech founders on that. So how was your experience? Most of us chartered accountant practicing, involved with due diligence. How was your due diligence journey with, TransUnion or SIDBI? And what are your message to the budding fintech founders to be ready for that due diligence? What they have to prepare themselves well to get those institutions on board as an investor?
Okay, so I'll park this question into two parts. One is, as a CA, what is, good from our side? Means we all would have that in our blood. So we'll be able to do it very, very, very finely. And second part is how to get them, which is the difficult part. Okay. So being a chartered accountant, before I started this journey, I used to do valuations. I used to myself do due diligence. I used to do internal audits. I used to do system audits. And most of us, all of us might have done something or the other in our life. And we know what is required so far as governance is concerned. And that is where I always tell that a chartered accountant should always be a part of the founders team, either a founder or a co-founder, because this entire part is easy for us. We know what is required in due diligence. We know how a valuation model works. We know how the financials have to be forecasted. We know the projections. We love working in Excels, right? So everything that the other person will get it done. A due diligence is also being done by a CFO on the other side, right? So we know how our fraternity is going to test us. So those waters are something I believe is an easy part. So luckily for me, my wife is also a chartered accountant, so she also handled a lot of part of the due diligence. My father and my father-in-law are also chartered accountants. So we knew how to handle the due diligence. We knew how to answer all the questions. Difficult part is the second part, how to get the investors and how to bring them on board and how to convince them that this is the right company now. Now, if you actually ask me in 2017, I had not dreamt that SBI or HDFC will be my shareholder or TransUnion CIBIL would be my shareholder. I was just looking into who could be the shareholder potential for this company. It was a lot of efforts. We kept on pursuing them. We kept on meeting them. We kept on telling them that this is a product which can do wonders for you. This is a product which can redefine the banking system. This is a product where we want you to at least join as users. So we were actually trying to get them as users. And the most important point all of you have to understand is a strategic investor. We call all the banks as strategic investor because they are users. They are going to use your infrastructure and they are going to be your investors also. So first is whether you want a strategic investor. Trust me, it's not easy. It's like I say that I have a strategic investor, he will come and give me business. But when you have a strategic investor, he knows what are your profits. And when you sit with him to discuss the pricing, you won't be able to negotiate a lot, right? Because he knows everything about you. So there's a very, very thin line on which you are walking when you have strategic investors. all my banks who are my shareholders are my users. I know how difficult it is to negotiate on the pricing with them and reach the break evens that we have to reach into, right? So first is bringing them, whether you want to bring them. If you bring them, this is a point you always have to have your back of your mind that they will know everything about you. So when you are negotiating on pricing for them to be your users, you should know that you won't be able to earn a lot of profit. Now, bringing them is the second question. You have decided, we decided we want to bring them. So bringing them is where they will see value in your product. That is the foremost thing, that you have to make them a user. Unless they become a user, they will not invest. So normally today I also go and talk a lot with ICICI Bank, and I always tell them that you guys helped me a lot, but I want at least one share to be given to them, right? But ICICI has not used my system. Okay. So for me to bring ICICI as a shareholder, I first need to crack the business team, make them a user of my infrastructure, and then talk to their investment cell and tell, see, these are the value additions I'm providing to the bank, and the bank can now be a shareholder of the company, right? So that is the most important point, to bring a TransUnion CIBIL, a US based entity, and CIBIL is the largest bureau today in India. Was also tough because we had to bring a product. Today, I don't know how many of you know, but we are rolling out a product called as a fit rank for MSMEs. And that fit rank is redefining the way banks lend to MSMEs. I'll not go into detail of that because that's an entire different session, which is for the banking industry today. But they found value in what we were doing. They wanted to partner with us to bring out a co-owned product and launch it in the market, which they found would be a huge market. And that is where they invested. So strategic investors will always come where they find value in your company. They find they will use your company for their growth also. So that is how strategic investors come. A lot of story behind it. A lot of my friends also know it over here, but that's the summary of it. Yeah.
Oh, thank you. In fact, I think Hitesh Bhai is here today from ICICI Ventures.
He has visited our office also. He allowed our company to just told get the business going.
and we've been interacting with him as well. So Vineet, coming back to you, I know you worked in Saudi, India, and Vietnam also. I know what role across clients and projects, what does fintech is defined, and can you help us explain and dissect it?
So fintech is a big space, very big space. It's financial technology is a short form, but within that, when you dissect it, uh, uh, definitely you have payments, open banking, then you have neo banking, you have P2P lending, you have reg reporting, then you have AI and ML models, then you have robo advisors, insurance tech, and there are a number of things. So fintech itself, and why this is important to know is if you're doing a startup or if you're trying to grow it, because at the end you're trying to solve something, you need to know the place you're playing. For example, Jinesh Bhai is trying to solve lending issues. Deena is trying to solve open banking. There are more space within FSS sector which you can solve. I'll take one example of, which is close to my heart is insurance tech, which is a big space. Not really, you don't have much of, I would say, startups there. That is one big space where you can play, where you can reduce the insurance premium if you operate there. At the end, as of now, how do you charge insurance for a number of people? The insurance companies would take their age, smoking pattern, and thus give them, this is your premium. Or they will take a medical test, which is same here in India and UK. But now things are evolving. They will take your heart rate from your smartwatch, or they will take your dietary pattern and reduce your premium if you're healthy. So that is, if you know the segment, and then you further deep out, you can have a good startup, and I would say fintech there. This is, I would say.
Perfect. Deena, we talked about Jinand by shareholders. Also, in open, you have shareholders like Temasek Singapore, Tiger Global, Visa, all again international investors. How was your experience on the due diligence side? That is my first question. And second is, what are the message again to the audience that who may be aspiring to raise their capital for their clients? So we talked about raising capital versus institutional investors and strategic investors. But if we have few members in the audience who may want to raise capital for their client versus strategic investors and institutional investors outside of India.
So funding journey started with, I remember now when we look back, yes, I mean, when we look at the cap table, we have global investors, we have large institutional, large corporates like Google, Visa. In fact, from India, from IFL and even banks we have. So that's a list we have. But going back to the first initial days of funding, that is what defines from a momentum perspective. So there are some companies, some businesses which would definitely require business to get off the ground. Particularly, for our kind of, which was majorly a product company, it was given that it is going to be a long haul. Like you will have a product building phase wherein you might not be able to monetize as well as you want to invest in the product, because that is how you define the market. And that initial funding, I would say the first two rounds would have been the toughest, because that's where you don't have, mostly people look at the team, the idea, the potential of the idea, and how much it can go globally at what scale, because this is stark difference. That would be the difference between the strategic and the financial investors when you look at, because strategic would be looking at from, they themselves would take a position, whereas from a financial investor, they would also be looking at, whether this is a team. Even if I have a thesis about this area, is this the team and the idea which can scale and I can make money from there? So that part was extremely tough. And that's the time where it has to be majorly on. This is where all of us can play a role on spotting the right ideas. And if we are able to make networks around it, and people who are, that's where friends, family, the angels in the network who really know the team, you know the idea. And that's where first set of networking and our skills in terms of analyzing the company comes into picture. There's a huge need there. India doesn't lack talent, but I think, somewhere in the initial phases, when you look at tier to a lot of other areas from other than the second time entrepreneurs, the first funding is still a challenge. So I would encourage that if we can spot talent, spot people, we also have this thing of, can we make entrepreneurs from a very early stage? Can we support them in the initial part? So after that, it's about, with that money, where do you get to in each of the stages? So there again, the traction, the execution is going to matter. Like what product you're able to get till there, which is where not perfecting the product shouldn't be for each milestone, but can you at least test your thesis, get it out to the customer, get the real feedback, and gain traction, because there's a problem you're solving. There is a product which is there. Rather than perfecting, can the market tell you, vouch for it? And that took us to the next levels, wherein, traction and the numbers started speaking, which again, and each stage we should break it into in terms of who are the ones who can look at early stage and bet. There is no point in having conversations with the late stage or a growth stage investor when we are raising a seed, series A, or even up to, in some cases, even up to B. And the second aspect we should be looking at is, one, the stage, and second, the sector thesis they have. The kind of, the business we are bringing to them, do they have a thesis in the sector? Have they invested earlier? Have they seen the realities or complexities of the sector? And then coming to later stage is also about, again, the same matching part of it. So that has worked very well in terms of having lesser conversations, because fundraising can be extremely challenging for founders, because you have a business to run, you have a business to grow, and at the same time you need to have probably 100 conversations for a few of them to really get fructified. But at the same time, as a company grows, we should also advise them in such a manner that the visibility should be there very well. And people who are raising, we should have a very good network with the investors also, the potential investors. We should map for the sectors we want to play in, stages we want to play in, look at where all, and this is very dynamic also. Like last 12 months, those who had a thesis would change from the next 12 months or next 6 months for that matter. So we should have a dynamic list of who are the investors who could potentially be the kind of people I'm serving for, who are the potential investors. Keep a deep relationship with them. Also, on the other side, advisor companies in terms of what all are the key things they are currently looking at from both from a macro perspective as well as from the sector perspective. And then, ensure that the companies are also in the visibility level in terms of various other things of product, what they are making. So this is where the whole branding, marketing, or talking about what they are doing, that part also is a very critical aspect in getting a fund. So when we are advising a company, I would say that there's a 360-degree we have to look at also, right from the way in which the company is positioned and the numbers are going, because that is also something which the discipline has to be there of month-on-month growth, the kind of metrics during the fundraise time, then about the visibility of creating it, where all it should be present, and having that whole network of the relevant investors who could be the most critical ones we have to show the company to.
Perfect. No, thank you. So, there's an opportunity for our members to advise our client on the fundraise as well. Yeah. Jinand bhai, online PSB has been awarded many awards. I've been scrolling the list and it was unstoppable. No more than I think 36 plus awards. The recent one which you got in May 23 was from BFSI Innovation Conference and Awards for AI and ML. Now we all know about artificial intelligence and machine learning, which all we reading, but can you share how AI is playing role in your business growth and risk management?
Yeah, so AI is definitely the next big thing in the space that we all are working into, and all of us now have some or the other experience of using AI, and most of us would have some way or the other, tried out the Chat GPT and how it answers to our questions. Even I do a lot of times when we have group meetings. I just check what is the AI's view as compared to our team's view. So that's something all of us have tried it out some way or the other. But yes, AI is something we had been working. In this is because the vision back then in 2018 was, if all the banks are investing in a company and they are doing a lot of transactions using a single platform, what happens is that platform will have very rich data. And how will the banks leverage this data? The banks wanted to leverage this data in a manner that the risk models which are used for lending have to keep on growing. And if you say that you have got a risk model that is based on a consolidated data processed by a lot of banks, say you have SBI data being processed, you have HDFC data being processed, you have BOI data being processed, you have PNB data being processed, all of this data getting processed through a single infra, where the user is allowing you to do analytics on top of it with all the encryptions and non-sharing of data provisions being there. And if you build risk models on top of data, which is extremely rich, that will be the next level of risk models. So this was a thought process in 2018. Can we do it? 3 years, 4 years down the line, we figured out that the aim that we were working on has reached a maturity stage that we can now start giving out outputs, which is AI based. Say, for example, you have a lot of data on which you can build analytics. So first thing that is required is, do you have a data? Second is, do you have the consent? Third is, do you have, so these are all stat models. So you need a probability model to be efficient enough to inform that this person will default. And that is where CIBIL joined hands with us. And that is where CIBIL, one of the reasons why CIBIL invested in us was that we had one leg of data, they had another leg of data. And we combine those data and we build an AI model that will be the top AI model that can be built. And CIBIL, TransUnion globally is building a lot of AI models based on bureau data. We are building a lot of data models. We are building a lot of data models based on other than bureau data. So in a bureau language, I'm going a bit technical. I'm sorry for that. But in a bureau language, we call it as an alternate data. So we had GST, ITR, bank statement, bureau, lot of data is combined. And we created a risk model, which is called as a comprehensive MSME score, which is based not only on your credit history. Today you see a CIBIL score. CIBIL score is based on what? Your repayment history. You are making repayment of your loans, so you get a CIBIL score. But it never looks into your financials. It never looks into your net worth. It never looks into your transactions. So if you build this all along with a bureau score, you get into a next level of score. And whether that next level of score is actual AI model, then yes, this is an actual AI model. So we just presented it to a UK, it was one of the grand events and we never thought we'll win that. Okay, so we had presented that we have built this kind of model in India and we have started giving it to banks. It is for ranking an MSME. And that panel kept on taking interviews and interviews and interviews. So the bad part from us was we did not go there because we did not know that we are going to receive an award or not. So our governor from India won an award in that event, and it was the Central Banking Awards in UK, and he won an event, and it was all over the social media, and we realized we also won in that event, but we were not there. So we got the thing parceled to us in India. But yes, this AI model actually won a global award, saying that globally they have not seen such kind of AI score for MSMEs. The target of 2018 we achieved in 2023.
Fantastic.
Yeah.
I wish if this session would have done last year, Vineet would have collected the award on our behalf in UK. Yeah. Yeah. So Vineet, coming back to you, the fintech innovation come with the data security and privacy concerns, which we all know from Mark Zuckerberg to all been put behind, I mean, in the discussion point of view from a data privacy. So where you see the risk and what are the mitigations?
So the moment we go more digital, issue starts because data is there. Now, the risk is from different parameters. It can be identity theft can happen, malware can happen, compliance issues because reg reporting, many of them don't follow regulations. They don't know what regulations are there. That's a big thing with financial technology companies. Then you have data privacy issues, especially in Europe, UK. They are very, very stringent in GDPR. Even when they want to outsource work, they want to be sure that their data is there within UK or Europe. So those things are very important from fintech point of view. And if the startups are not really well equipped many times. They don't know, one, ignorance, second, they don't have resources. And that's why they face issues. I would give another example where I would say fintech helped to unlock a fraud. There's a bank in UK called Monzo Bank, which is no branches. It's a neo bank. Even I am account holder there. And in 2020, they reported to a third party, Ticketmaster, that is a fraud happening at your website when people are booking tickets. And they ignored it. How they came to know? This is a neo bank. They don't have branches, but they're based on digital. They use AI models, MN models, and they found that within their customer base, which is less than 40,000, they found there's a trend. And within 2 days, they reported that. And they reported to the company. Company ignored, the CEO ignored there. And that happened. And when it was discovered, it was a big fraud. Even the large banks like Barclays Bank, they could not discover. So Neo Bank discovered a fraud happening. They told the vendor that there's a fraud. They could not disclose. What they did, because they knew fraud is happening, they blocked all the cards of the customers. They reissued without naming what is the issue. And they saved their customers. So this is the way I would say fintechs are, I would say, issues, but on the other side, they are well versed to handle some of the risk and mitigations. And later on, what it was found for Ticketmaster, they copied one of the third-party code in their payment platform, and the data of the customers, the address, their cards, their pins was exposed. And the hackers came and they just stole the data. And they were big millions of fine on that. But after that, Monzo Bank became more famous, and a lot of customers like us, means we keep most of our money with Monzo Bank, though it's no branch, you have not seen that.
Great. So we have just now 10 minutes to go. Keeping in timing, clock in the mind, we'll go to a quick rapid fire session of 6 questions. And I want you to limit yourself to 1 minute. Yeah. So starting with Deena, any plans to go outside of India?
Of course, we are building a global product, and this talks a global language. We do have plans, but not at the cost of India market, because India is huge and we are always invested in the India market.
You're welcome. We see in subcontinent, the larger market like Bangladesh, Sri Lanka, and of course, Kenya, we are there. So looking forward. Jinand bhai, replicating this outside of India.
So, definitely everyone wants to go global. Yeah, but the Indian market is huge for us today. So it will depend on the strategic. So we have gone the strategic way. So once we get the strategic partners to go global, that's the time we'll be going more global. So we'll wait. We are in touch with strategic players for global, and that's when we'll go global.
Perfect. Vineet, what's your advice to young CAs here to join a profitable bank or a fintech which have just raised P series but backed up by strong founders? So, job in a bank or a fintech?
So for young chartered accountants, I would say take a risk, join a fintech. Uh, you'll definitely not lose. Uh, you'll have a lot of experience and that will help you out. So a startup or fintech, I would say.
Thank you.
That's my call.
Dina, there's a lot of talk about the profitability. So, what do you see the average number of years taken by a fintech to break even and then become profitable? Just number of years, break even and profitability.
So I would say that it depends on the type of business and the segment you are in. It varies a lot, but on an average, at least a 7 year just to come to a 6 to 7 years if you are in the B2B space to come to profitability. I mean, break even somewhere and another year or so for profitability. But this is where I would say that by training all the chartered accountants out here who are considering early stage of the of any startup, or even when we are advising the customers by training, I struggled with it because the last 12 years I'm a part of startups. In the first few startups, I struggled with it in terms of looking at the bottom line negative, and that's not something which we are tuned on. And there's no ratio which can apply on this kind of financial statement. So initially, it was a struggle. What do I really look at? And that is something we need to unlearn. Maybe if we have to go to a startup, don't really get scared or stressed about that happening. Consider it as an investment, because we are tuned to fixed assets or an asset or a project investment being like calculating ROI on that, but not on the bottom line from the profitability. Consider it as accounting has to evolve, maybe. So that's the only thing I would say.
Then by we've seen the listing of Paytm and Policy Bajaj, right? What's your advice to the member to invest again in a traditional profitable bank or a fastest growing loss making fintech? Members are awake now.
So personally, in my portfolio, I've invested in both to hedge the risks. Yeah, it depends on the pricing at which you are investing in a fast-growing fintech. The risk is high, but you have to be very clear. You all are, have the brains to see the valuation model that has been adopted. So before investing, just look into the model that has been adopted when a valuation is done for a fintech. So that post-listing, it can go down also. And after it has gone down, you can actually see at a point where it will now scale up. So I have invested. I have not gone through an IPO investment. I had invested, or I still have investment there. It's when I saw that it has reached a bottom where I felt this is now, I think, a bottom for a fintech which will grow and which is known by most of us. So that's where I invested. But before that, because the IPOs recently came, before that I was invested more in the shares of the public sector banks who had invested in me because I knew that they are going to grow along with me. So yeah, but they all have. Means our prime minister also promoted them, right, in the last budget meeting, that the PSU stocks are going to grow. So banks definitely always there, but fintechs, you have to be careful which level you are investing, because you can get very good growth, but depends when you invest.
I have one question which has just come to my head, that if you, any of both of you, Deena and Jinand, if you have to go for IPO, will you go in Indian stock market or would you like to consider Nasdaq?
Any day Indian market.
I'll go for a good advisor from the fraternity sitting here and tell me where to go.
Good one. So we also have CAs from overseas chapter from San Francisco and US and New York, and of course the data accounts are here. Last one, Vineet, if you want to become, because we are all present here, the fintech founders. If you have to become a fintech founder, which idea you will pick up in what stream?
So if I need to invest myself in a startup, I'll go for reg reporting. The reason I've seen in Europe, it's very stringent. The penalties are high where banks and insurance companies invest a lot. So there is where, as a CA, I can add value. I know how to read regulation provisions. That is my strength, and technology is my strength. So there I'll invest. Second area where I'll invest is, or I want to indulge myself, is sustainability, because that is one big thing which is trying to marry with fintech in all the areas. Like now the banks, when they give loans in UK, earlier they used to see the profile of mortgage advisors or the parties. Now they use weather.com. Where's the property? What's the probability of storm there? Or whether they're issuing travel insurance, what's the probability? They use real data, weather data, and other things. So second is my sustainability, I would say, with FSS FinTech, I'll do that.
Perfect. Thank you. So we are well in time. We have still 3 minutes to go, but I'm just
We
handing
can
over
take
to Piyush.
questions, 2 or 3 from
Yeah,
the audience, I
anyone?
think. So I believe, Pankaj.
Quickly, 1 or 2 questions. Why don't you come here quickly?
Please provide mic.
Yeah, we are.
Audible to us, but I don't know behind.
See, many of the startups and fintechs are basically, most of them we see are using AI as a technology. So lot many less fintechs are using blockchain. So what do you see the prospect of blockchain being disruptive and forming a new technological basis for a fintech?
Deena?
Maybe I'll take that question. So, blockchain, for example, I think this is going to redefine the way we have seen a lot of money movements happening as well. Just to give an example, even in India, where we have done within RBI sandbox in the second cohort of the cross-border payment, we have a go-ahead from RBI in terms of a blockchain-based money movement cross-border. And think of it as, blockchain as a technology. What does it do? It's completely a tamper-proof, at the same time, different distributed areas you are validating what is happening. And think of the areas where today, in terms of the money movement and other things, that both from that along with the contracting, there are a whole lot of things as a use case today which is not yet solved technologically completely, and human intervention is there. And that's where blockchain can come into picture. While AI today, when we are solving for the data, the large data problems, is where both the AI, be it generative or from a computational perspective, we are using it very effectively, started to use it. Blockchain will redefine the way we have seen things happening so far in the fintech, I would say.
And do you see the marriage of AI and blockchain in a single technological solutions?
That's inevitable, like in the sense these two are going to be slightly,
Right now
different
they
from-
are solving problems separately. These two technologies, because their area of operations are on a two separate domains.
So what's happening is that you think of the use cases this technology is going to solve. For example, we have on one side, when we are talking about our own, there is AI on various on the data set, which is happening on the other side, blockchain, which is on a money movement, which is happening. I mean, both the technologies are simultaneously used for solving the use case for the same customer who is having interaction at multiple level, be it payments, be it compliance, be it on the data management, all of that, including security, right? There are multiple areas on the same platform, but the customer, when he is using, he doesn't understand what all goes behind. So that's what I mentioned. It could be like, side by side on areas where it has to be solved for.
Thank you.
I'll add to this. And that's a good question. See, at the end, what you're doing is you're solving one problem. It can be fraud. It can be KYC problem. So it can use multiple combinations. If I take an example of KYC, so KYC would use data, it would use biometric also, which is IoT device. And if you're using, now you can use face recognition. If bank is giving you face recognition, you are using your details and then you are using a mobile phone as your device. It can be multiple, and they might use AI background. They might get the data from other platforms. It's a combination. And then you're solving a problem with the optimal technology. So passion for technology should not be there. Passion should be for solving an issue. If you solve the problem with the knowledge you have, that is where you'll add the value.
Your
Hello,
last
hello.
question.
Can I take a quick question? I'm from Dubai. My name is Amitabh Majumdar. Thank you for an excellent presentation. I know Mr. Mundra for a long time. My question is that when you have used the word whether blockchain can be used, I don't know whether, but Pankaj, probably you will be able to answer this better. Can it be used for letter of credit discounting? And and its application? Because this is a direct use of this technology for the banking industry.
Yeah, Amitabh So yes, there are a lot of use case. We're already platform like they are not there in India, but there's a platform called Contour Network, and of course Emirates NBD and ICICI have done a transaction under blockchain, where a letter of credit have come to from ICICI Bank to Emirates NBD in UAE for a discounting. But what we're seeing is, I will have a bit of a different view when it comes to only blockchain. There's not many successful stories so far in terms of implementing and getting a right investors and the valuations and so on and so forth. So it's still what we're seeing with the banks, that they have implemented few of these transactions, but it is not that taken off. And for us also as a firm, we've been also a marketplace for letter of credit, but we kept away ourselves from that because we have not seen that sort of successful. Still, there's a not many right use cases, but yes, there's been transaction being done. There are platform like Contour Network who've been doing this, but we yet to see more successful stories as a use case compared to other fintech firms.
Hello, I'm Gopesh Shah.
The last one, yeah,
We do a
Gopesh.
lot of SME funding, and I must congratulate PSB 59 for this because before 4 5 years in SME funding we had to go to various banks from pillar to post, but now since PSB 59 has come into place, it has become very easy for us because the banks are approaching us after inputting all the data into PSB 59, and we can bargain on the rates also with the various banks. So PSB 59 is an excellent
My request
app
to come on the question if you can.
because it can be also improved. Like I can also give some inputs to Jinand Bhai because you can also give some.
Yeah, so I know. So the point is, out of 100 cases that are coming,
Yeah.
50 get disbursed, 50 don't get
Yeah.
disbursed today. And there are a lot of inputs, Gopesh Bhai has been using our form since some time. So those inputs we can discuss one-on-one also. We
Yeah.
keep on giving those inputs to banks also, right? So it's something that the banks have to implement at the end of the day, but definitely. Thanks, Gopesh Bhai. We'll talk on it. So
Pankaj Bhai, I think so. We'll take a last question in the first row. Somebody. Yes,
have a
please. Please, if you can just, there's a mic away.
Thanks. I think it was a very insightful session. Just a quick question. We have seen the trends in the fintech space where what we have seen in the past is like, the solutions that the fintech will roll out would be sourced by financial services like banks, insurance companies. Then came a trend where they started to take over or buy out these kind of fintechs. What is the kind of disruption? Pardon my adverse thinking. What is the kind of disruption that you are seeing in the fintech space going forward? Because if such trend continues, then I think the job opportunities, some of the prospects that the fintech has may not turn true, given the fact that these keep getting acquired. Do you also believe that the banks, the insurance companies will start creating those solutions, which are currently predominantly, I would say, the prerogative of these fintechs? What kind of trends do you see going forward?
I'll take up this and then you can add on.
Thank you.
Just to share with you, this is very, very interesting. I'm part of an American Banking Association, and I'm auditing the similar session in Feb in Washington, D.C. From 2 months from now. And the topic is whether bank can build themselves, they partner, or they invest. And this is the trend which you're seeing. See, most of the banks globally have started their own fintech fund. So you have banks, Santander from Spain, you have Citibank from US, HSBC, Stanchart has got SC Ventures, right? So what they will realize that the fintech will continue to grow. The ideas will continue to grow and come from the co-founders. The key reason of the success is the bank cannot move that fast in terms of their internal approvals. It's not that they don't know this problem or the idea, but bank have a regulations. They have a, sort of a bureaucracy to take a step on a particular idea. So what's happening? They will continue to invest in this fintech. Yes, they may acquire because of various reasons from a compliance or regulatory this thing, or maybe they have a base use case that they're seeing a more like a sort of strategic partnership. But it's not that they will start building on themselves. The gap will continue to be there. They will have a bureaucracy. They will have time consumption to get that approval in the boardroom. But yes, we see more and more funds coming in from the banks, but either bank is investing directly from the prop book or through a VC route. But I think the way we see the trend that they were looking to collaborate at the right time when they see the right use case, which they see in the PSB loan as well, they will come and partner invest, because what they also see as a fear as a bank, if the bank is investing in a particular fintech where they're not using that as a product, okay, and a vice versa. There's a lot of data our bank is also going through while they're not, the staff are not seeing, but we're seeing that if the loan is funded by SBI or Axis on their platform, that information can go back. So one of the reason they want to invest also, they want to also have the control through the boardroom that the data has been protected, and the key USPs of that product is also not going outside. But I can say there's a huge bandwidth coming from the banks and the funds being set up by them, that the trend will be that they will take over the VC funding, and you will see more and more bank coming in and investing, especially in fintech sector. Yeah. Please. Yeah.
I would like to add here in terms of our experience as well. So today we work with around 19 banks in India, right from SBI, in terms of the value-added services. So for example, when it comes to the customer serving part of it, or the customer user experience part of it, distribution and penetration, banks are still looking at the fintech expertise. And then the other trend which is emerging is also the embedded finance, wherein the banking as a service, the BaaS and the embedded finance part of it, wherein banking sits in the commerce part of that's being spearheaded or taken ahead by the fintechs itself. And we have seen globally inbound interest from whole lot of banks who say that we do our part better, which is banking, and we don't want to get into solving for the customer problems. And we have also picked only the business problem, for example. And that right from Southeast Asia to Europe to US to Middle East, the kind of inbound interest we get every day, at least, and that to very large banks. We know that, and that too in India as well, all the top banks working with us. We know that going forward, collaboration is going to be the theme which we never saw in 2017-18. And that way, I think the thought process is also getting differentiated. I mean, slightly different in terms of what is integral for providing banking services versus what is important in terms of serving the customer better. So these two, maybe integral, they might think of taking over, having it in their fold, whereas it's important, critical for customer distribution, experience, building innovation, the banking on fintechs. And that's where the collaboration is coming together.
Thank you, Deena. I'm in the closer while I hand over to Piyush Bhai, but I invite, and we are welcome for any of the corporate here or a fintech or CA to want any collaboration in Dubai. I'm here in UAE for last 19 years and part of ICAI in UAE. So you're welcome for any expansion, both to Deena and Jinand. We're welcoming you to UAE and any of the member to connect and see if we can collaborate together. Thank you, and Piyush Bhai, over to you.
Thank you very much, Pankaj Bhai. A great round of applause for the panelists, please. Thank you, Jinand ji, Deena ji, Vineet ji. I believe obviously the fintech services, the major challenges would be, of course, you are doing very good when it comes to onboarding the customer. The challenge remains what happens after onboarding the customer. And that's the space area which I'm just talking of. If I take an insurance area also, it could be good. We may speak of Echo Policy Bazaar. They're very good at onboarding the customers. But when it comes to a claim processing, I do not find much fintech companies into this. And I think so there would be quite a great opportunities over there also. That's
engagement and the whole life cycle of the customer. A lot of work to be done.
Yes. So thank you very much. I would request Abhinav to kindly conclude this session. Thank you.
Thank you, sir. And on behalf of ICAI, I see Abhinav Malviya feel privileged to deliver the formal vote of thanks to the eminent panelists for the session and also the moderator. So I thank CA Jinand Shah, Ms. Deena Jacob, and CA Vineet Jain, along with CA Pankaj Mundra, who is also the past chairman of Dubai chapter. Big round of applause for all the three panelists, the moderator, and our respected Center Council member, CA Piyush Chhajed, sir. And first of all, a big congratulations to CA Jinand Shah for sharing his inspiring story. It would have been surely inspiring for all of us as well. And we wish you great success in future times as well. During his talk, what I concluded that he has reached such scale because he has adhered to the principles of ICAI, which are excellence, integrity, and independence, which he has adhered in his business. And listening to Ms. Deena ma'am, she shared how to conceptualize the idea and also raise funds for gearing up and also scaling up the business. And as CA Vineet Jain sir, he is the technology expert. He shared his practical aspects and intricacies. So big round of applause for sir and ma'am. And we request you to also join us for future ICI events as well. Now, moving forward, we would be felicitating the eminent speakers, panelists, and the moderator. So I request CA Purushottam Khandelwal sir to please come on the stage and felicitate CA Pankaj Mundra, founder and chairman of 360 TF. Please, may I have a big round of applause for CA Pankaj Mundra, sir. Now requesting respected Central Council member CA Kamisha Soni ma'am to please come on the stage and felicitate CA Jinand Shah, Managing Director and CEO, Online PSB Loans. Now requesting CA Pramod Jain sir, respected Central Council member ICAI, to please come on the stage and felicitate Ms. Deena Jacob, co-founder and CEO, Open Financial Technologies Private Limited. Requesting CA Kamisha Soni ma'am to please come again on the stage and felicitate CA Vineet Jain, technology expert and secretary, UK chapter of ICAI. A big thank you to the patient hearing of the audience.